Hey, welcome to Cryptonomy. Today we're going to be discussing how low will Bitcoin go. Meaning, what's the percentage from the top to the bottom that we can reach, and how long will that bear market last? If we do assume that the top already happened on October. Now, there's a likely chance that the top could happen later this year, or maybe have an extended cycle. But this analysis assumes that the top is in October. And if we do get another bounce and make a new higher high, then we can just move our numbers very easily and adjust it to the new top. So, my name is Mo, and I'm a computer scientist and data scientist. I've fell in love and started trading 6 years ago. I was able to turn a modest crypto portfolio into 6 figures. So if you would like to know what worked out for me and the mistakes I've done and what I've learned along the way and how I was able to make money in this industry, so do please like and subscribe and watch this video. So the first thing we're gonna actually discuss, of course, is the previous Bitcoin top dates. And we're gonna keep our analysis, at least for the start, based on the statistics and the previous market cycle of Bitcoin. And then later at the end of the video, we might apply our bias. So a percentage where we think this cycle could be different, because it is different. If we did top in October 7th or something, I think, then surely this cycle is not a copy-paste, right? History does not repeat, but it rhymes. But the trend is different till the end when it bend, and this is why the trend seems to be going down. We have broken many levels, which can be a signal even that the bear market may have begun, and therefore it is quite important to start doing this analysis, to prepare for it, whether to take out money you invested, or if you're thinking of investing, maybe you should readjust the time frame of your investment. Maybe you should invest when it drops, right? Or maybe you want to go short. So I hope this video helps you. First of all, well, second, basically. Nothing said in this video is financial advice. It's based on, it's made for educational purposes only. So do please, before you make any major financial decisions, even small ones, do your own research, watch a lot of channels, and apply your own thinking. This is how you can stay safe in the market, and you make sure you're in control of your finances. Yeah. So the previous top dates are pretty easy to find out, right? All you have to do is just go to the Bitcoin price and check every top that happened. We have had 3 tops. One around 10 November, another one around 16 December or so, and a third one around 30 November or so, right? We're not gonna count that because we will assume that this was one cycle since it was 4 years, right? So those are the assumptions we're gonna work with. First, I like to go to the 3 days just so we get bigger candles, right? But the days, I've picked the correct dates on the daily. The 3-day might just show a day or two off. It's fine for that. So if you get all these dates, then you can obtain a range where Bitcoin have topped in previous cycles. And that's between, 12, 15 December to 6 November, around there. That's all the previous Bitcoin tops. Right now, we seem to have ended a little bit earlier, if that assumption is to be proven true. Now, nobody has a crystal ball, and everybody will know if this was the top or not after the fact. But after the fact doesn't make you money. That's why you have to speculate on, and you have to make a bet whether it's the top or not, right? So I'm personally exited my long position a long time ago, like down up there, and I've been shorting, which seemed like the best option you could do in this type of market. And there was many reasons, which we discuss in other videos, why we think the top is here and why we should probably be cautious and careful in our investment decisions about going long. Um, but yeah, that's the fact. The second thing you have to know is if we have entered a bear market and you're thinking of allocating capital, right? Everybody wants to allocate capital at the bottom. Well, it's better to plan this ahead. It's better to know when did previous cycles bottom. And if you do a similar approach, we can go get all previous bottoms. Right here was like around 9 November. Here was around 15 December. And finally, this was around 13 January. If you collect that range, you get a little bit wider range than the tops, which is quite narrow and might expand soon, right? I believe if we, in fact, top earlier, we may bottom earlier. And I believe we have topped earlier because this market cycle was a little bit faster. And I know you might say, well, we didn't get no euphoria. How is it faster? I mean, faster in the way we started to go up rapidly. If you recall, we have reached all-time highs way before we should have been. Like 4 to 6 months before, if you calculate the math. Now, we're not going to do it here, but I've done it before, and please do check it again if you want. But we did top earlier, before the Bitcoin halving. We usually top after the Bitcoin halving. Here we top before the Bitcoin halving. Now, if you do get the Bitcoin halvings, right? You would notice that we topped before. We reached the all-time highs, if you respectively to the previous cycle, right? Now, if we go and check all the other ones, we have reached all-time highs way after the Bitcoin halving, which can be around there, right? So it wouldn't be a shocker to expect that Bitcoin would top a little bit earlier as well. It does make a little bit sense, right? So it is not a far-fetched assumption, by the least to say. So now we know where the bottoms can be. Now we understand where the tops can be as well. And now we understand why we may have ended earlier for a good reason. How far low can we go? Right? And this is where it gets a little bit tricky, because you do have to take into consideration that there's larger players with more diamond hands than diamond hands themselves. There's corporations, investment funds, and a lot of countries jumping on board to the Bitcoin wagon. They all want some of the, piece of the pie. So it's not all retail traders anymore. And therefore, I do think we should take that percentage with a, grain of salt and apply some form of bias that we should at least be aware of, right? At least be aware of. And we should be aware as well of how far did Bitcoin go in previous cycles, and then form a range around that. I believe that's the statistical approach that makes you a successful speculator in the market. Not just by placing trades, but by doing analysis and understanding market conditions and applying some kind of bias at the end of the day. Now, in computer science, even in machine learning algorithms, even in statistical approaches, there's some equations where even the best equations allow you to input your bias, because you do have a brain that is pretty analytical, and sometimes when you give a percent, it's pretty close to the real bias. I don't know if you've noticed that before, but we're pretty smart creatures, and applying a bias can be the difference between making money and not catching the top. Sorry, between catching the bottom and not. So making money or not. So to determine how low can we go, all we have to do is just go cycle to cycle, pick the top to the bottom, and add them right here, and we will find an average, and then we can understand. So the previous cycle, we actually went down 77% from top to bottom. Before that, we did go 84% from top to bottom. And before that, we went 86%. Now, one thing, around 87 if you round it up. One thing you can notice straight away is that every cycle on cycle, the drop is getting less severe, but not by a big margin, by a small margin, maybe a few percents, but nevertheless, we should account for that. So I don't believe we're gonna get to 77%. I believe it could be around 60% or something. And we will explain it. So if you take the average days length, which is, oh, by the way, as well, we have to check how long is the cycle, right? First, we're gonna look at the percentage drop, and then we'll go to the average days length. So the average percentage drop, if you input all of these right here and just do some simple average arithmetic, then you get 83%. And this is where this white one goes by, which I'm gonna increase the opacity right now. 83%. That's the average. But I believe we're gonna be above the low end of the drops. I don't believe we're gonna reach the average. And I could be wrong, of course, 100%. Everything is in probabilistic terms. There could be some black swan event that gets you down by 90%, and we should always be prepared for that. But where I'm gonna start catching the top and investing capital, hopefully, is when before we reach the 77%. This where the blue one comes. That's the low end right here, and that's the average. To complete our discussion, we do have to also calculate the average days length of a bear market. So from top to bottom, how many days did we go down for? And you would see this number a lot on Twitter or X, whatever. 365. That was exactly how many days last cycle. The previous one was also 365 days, but contrary to the belief of many people, the first one was 412 days. 420 would have been nice, but 412. Nevertheless, what we're gonna do is gonna input them right here. This one is actually 364, but nevertheless, you would get around 380 days. And that's where the white line is. From the peak, 380 days would get you around 20 October or 19 October. Which you may notice that it does not align with the previous BTC bottom dates. But if we reached all time earlier, and if we have topped earlier, would it make sense to bottom earlier? It would. It would. So let's keep that in mind. And if we take the bottom range, so 364 days, 65, then we would get around 4 of October. For me, I'm not gonna look at the averages. I'm just gonna keep it in mind, but I'm just gonna dim this out a little bit so we can focus on the low range. Because anyway, you don't want to stop buying, at least for me, this is not financial advice, at the exact bottom. I like to buy just before a bottom. I like to get my initial position right here and take it up here. So I like to average around there, right? How I suggest usually people do trades, and a lot of people recommend that, successful traders, is, for example, if you want to invest, let's say $10,000, right? Then one approach is to split that over some amount, say 6 or 4 trades, and place them like a little bit here, a little bit here, a little bit here, a little bit here, and then you'd average around there, and then you would enjoy that. That's the safe approach with tight limit losses. That's how I like to do it. And so I do not try to to catch the bottom, because that's a fool's game, right? Nobody can determine the exact top or bottom till after the fact. And therefore, I like to be a little bit early. So now we got our percents, 77% and 365 days. Then we should, by our calculation, reach $29,000 per Bitcoin on 4th of October. And of course, this is not going to be exactly the same numbers. It's going to be around there. That's based on this statistical analysis. However, I do believe that the market participants are different this time. And therefore, my bias was here, but as I see the price and how it's going down and the buying pressure, I might adjust my bias down or up accordingly. 77% can seem like a lot now. But for me, I think 60% is good for Bitcoin to go down. 60 to 69 is a good range. 70 to 76 is something has to happen. Some outlier event, maybe some exchange falling down, like last time it was FTX, or a banking crisis, or a recession in America. That's what would lead us to those low levels, I believe. But if we get like a dim, lightweight bear market, I would believe to be in there, right? In that range, between 50 to 40K. But I can't help but wonder whether that's a safe assumption. Because if we do go look to the stock market, right? And if we do take a snippet of the dot-com bubble, let's do that. Maybe the 1 week would be good. And if we take that one from here, and we take a bar pattern to here, then it's hard not to, oh sorry, not from there. From there to there, it's hard to overlook that this market cycle is a footprint of the dot-com bubble. And if you think about it, the innovations done with the internet are almost as huge as the innovations that will be done in AI. And during the dot-com bubble, there was a lot of companies promising everything, like right now, a lot of AI companies promising a lot of funding, a lot of investment, a lot of hype, little innovation. But after the bear market has came and gone, the benefits of those innovations have came around. The similarities are huge. And therefore, I don't think it is safe to overlook that we may hit our low range. It could be here. Accounting for the diminishing returns that we have seen cycle over cycle, we could maybe not go 77, we could maybe go 70, 72, something like that. Anyhow, this is my view on the market. This is where I believe it will head in the next year. It will be an interesting year. And it's not a bad thing that we go down. Going down brings more opportunities than going up. We just have to be patient. We have to be safe. We have to understand. And you have to follow the market. You have to trade the market that you get. You can't just tell the market what to do and it does what it does. So it's just best to look at data with a clean heart and remove any bias in the decision making. I hope this video helped you. If you like videos like this, please like and subscribe, and I'll see you in the next one.